today's show, we have a very special guest for you and a topic that everyone needs to think about: retirement and what it means in today's context. Today, we have the pleasure of welcoming Mr. Ashok Sardana, founder and managing director of the Continental Group. Ashok has been advising clients on a range of financial planning solutions for over 40 years. He has worked extensively with high net worth and ultra high net worth families across the globe on all areas of life insurance and legacy planning. He continuously seeks to find more thoughtful and effective ways to help his clients live the best life they can. Boss, welcome to the show.
Thank you, Anselm.
It is indeed an honor and a pleasure to get you in the seat across from me for a bit of grilling.
It's my pleasure, and I don't have anything to do, so this is the best thing I can do today.
Thank you. It's an interesting conversation, and the topic that we're sort of exploring today, something that that sort of approaches retirement as a concept. And very often we hear the phrase, especially when we're going and talking to clients, we'd go and present the 3 stages of life. So we'd say, the first stage of life is the learning phase. You're young, your parents are taking care of your expenses, not much to worry about. Concentrate and focused on learning. Then we enter working life. We enter the earning phase where we are accumulating money, we're making wealth, we're getting and growing. And then it's been, the yearning phase is what we used to call it, where you're yearning for either you haven't saved enough or you haven't taken care of what your retirement needs would be. And that's the pitch that we generally would talk to clients, saying that you need to make sure that you're accumulating for your yearning phase. So how do you view those phases, and especially in the context of the topic we're discussing today?
One thing just came to my mind. The first thing you said is the learning phase.
Yes.
I think that learning phase has to continue throughout your life. Mm-hmm. You cannot say that learning phase is over now.
Yeah.
The day your learning phase is over, probably you're 6 feet underground. No.
I agree.
And also I think the day you stop learning or thinking that, I need to, you should have the passion of learning every day. Every day is a new experience. Yeah. So that should never stop.
Agreed.
Yep.
Agreed. Absolutely.
So learning phase continues throughout the life.
Yeah. Yeah. We continue to grow, learn, as well as implement those things in our life.
Yeah.
But from a perspective of the change that you've seen with regard to retirement and the way we look at it, have you seen a lot of change? Is it the same, or do you feel that there's something that needs to change?
Okay. I have a very different take on retirement, and I'm going to share this with you. This is my opinion.
Please.
If 2 people agree on everything, then 1 person is not required. So you're free to disagree with me,
sure,
which is fine.
Sure.
We talk about retirement, right? I remember I came to Dubai in 1977, and I remember I have an account with one of the banks in Galleria branch, which I think is still there.
Okay.
And I used to go to the bank manager. I would sit with him in his cabin, and he would say, call the office boy and say, bring a cup of tea for Mrs. Sardana. And he would bring a cup of tea for me, and I would give him the check, and he would give me the cash. Today, we do not go to the banks.
Correct.
I don't know where my bank is. If I call, I don't know where the person is. And now they charge us to go to the banks and provide the service. But there are certain things which have not changed. Like, you talk to someone and, what age do you want to retire? 65.
Yeah.
That 65 has come from... Do we know how did this age 65 of retirement come about?
No, but please, if you can share that with us.
During the 1800, Bismarck, Otto von Bismarck, who was the Chancellor of Germany, he came up with the idea that, fine, let's have a retirement. And he said, we will look after you for the rest of your life when you retire.
Okay.
And he chose the age 65, random.
Okay.
Yeah, there's no logic behind this thing. He chose the age 65. And he said, we will look after you for the rest of your life. And that time the life expectancy was 45. So they didn't have to bother, You're not going to be alive.
Yeah.
But today, everyone says 65, 65. I remember my grandfather was old at 55.
Yeah.
My father was old at 65.
Yeah.
Today, I'm 70 and I'm young.
Absolutely.
So 65, the age which people generally talk about retirement, I think that should be abolished. And personally, I think the word retirement should be abolished. If you look at the word in dictionary retirement, what does it say? To be put out of use. In 1997, 1994, they retired Jumbo 747. In 1999, they retired Fiat Padmini. At 65, Anselm, do you have more credibility or less credibility?
More.
Are you richer or poorer?
Richer.
You're supposed to be richer.
Yeah, most likely richer.
Yeah. Do you have more knowledge or less knowledge?
More knowledge.
Then why should you give up the game at 65 when you're at the top of the game? I don't like the word retirement because I want to. When you say retire, means it's an artificial line drawn by someone else who tells you when to stop contributing.
Sure.
When you retire, you become a consumer. Before retirement, you're a contributor to the economy, to the society.
Yeah.
Why should you stop contributing?
Absolutely. And I think there's an example that sort of comes to mind where I've seen many cases of individuals. I remember in one of my earlier roles and jobs, there was a major from the army, and I think he was probably in his 80s, early 80s, and he would come to the office every day. He would sit down. He would engage with the executives, and his mind was as sharp as they come. And he'd take his walks, and I think that kept him going, being a part and contributing, being engaged and discussing ideas was when he came alive.
Absolutely. My father was very active. 65, he decided to retire. I didn't agree with him, and I could make out that his health started deteriorating. He didn't have any purpose. He would wake up in the morning and he didn't know what to do. So my 2 cents to anyone: do not even talk about retirement. We should talk about financial planning.
Correct.
I'm not saying don't talk about retirement in the sense do not retire, but does not mean that you shouldn't plan for the future.
Absolutely.
One is a chronological age. I'm 70. You can't do anything about it. That's my chronological age. And one is your real age, one's your mental age. If my father didn't tell me when I was born, how young would I be? If I didn't know my date of birth, if I didn't know my year of birth, how young would I be?
Absolutely.
So I have no plans of slowing down.
No, that's great. And you touched upon something very interesting there. Yes, from a point of contribution to society, to the community, there really is no need for a line in the sand. From a financial perspective, how do you think we should look at retirement? The traditional approach has been more one of saying that this is the money you need to accumulate, and then from that money you draw down as as the years progress. If you're looking at a shift in the mindset as well, where we are now saying that we continue to be active, we continue to contribute. How do you look at planning for retirement now from a financial perspective?
I think the financial advisor should have a different conversation with the client. First of all, engaging him to say that you shouldn't retire. Or if you have to retire. Sometimes people have to retire because they have no other choice. They become 100% caregiver.
Got it.
Maybe the spouse is not okay. So financial planning for our later years is important.
Of course.
Do I have enough wealth if my wife falls sick? Or do I have enough sufficient wealth if I'm unable to go to work because of my health reasons? Do I have proper medical insurance? Do I have long-term care if available? Am I financially secure? So the most important thing is that when you have to start saving at an early stage. If you can put aside some money so that when you grow older, 70, 75, at least you're financially secure. Put your thoughts together. Where do I want to live when I grow old? I will not use the word retirement.
Sure.
Do I want to live closer to my children? Where are my children going to be when I'm 70? Are they going to be in Dubai, or are they going to be in the US or India or somewhere?
Correct.
Now, remember, I have been living in Dubai since 77.
Yep.
Can I go back to India now? Probably all my friends have, they have their children, they have their own families.
Sure.
Yes, I had very close friends, but they may not be very close now.
Yeah.
My families, my siblings are in different places.
Right.
So one also has to plan on, where do I plan to spend my older years?
Yeah.
Are the medical facilities available? Where are my friends? Where are my relatives?
Yeah.
How far are the children? Sometimes people say, I want to live with my children.
Yeah.
Maybe the children don't want to live with you.
That's true.
Yeah, you want your own space.
Correct.
Yeah, and the children want their own space.
Right. Absolutely.
Yeah.
There's a brilliant quote by Khalil Gibran on children, or raising children, that sort of just came to my mind. He said, your children are like arrows.
Mm-hmm.
You point them in the right direction and you let them go. And they find their own
Absolutely.
own life.
Teach your children how to walk, and then teach your children how to walk away.
That's very interesting. Coming back to what you said, I think important in terms of being able to plan. Many a times we discuss this in terms of planning early, or starting to plan early. What would you say is the right age to start thinking about the later years or as you get older?
Now. Now is the best time.
Okay.
Yeah, if you go to a person who's in his early 30s, mid 30s, he may say, I want to retire at age 65, but I don't think they understand the concept of retirement at 65.
Sure.
He cannot visualize himself at 65 or 70.
Yeah.
So he will say yes, anything. But the objective is that we should educate our clients.
Correct.
To put aside some money, make sure that you have proper medical insurance.
Yeah.
Make sure that you have a will, that in case something happens, make sure you have a living will, that in case you are medically incapable, who's going to look after you?
Correct.
So those are the things that a person should plan at an early stage. You don't have to be in your 60s to start planning these.
Correct.
But these are the thoughts that you should start writing them down, start putting them together at a very young age. Yeah, why not?
No, absolutely.
And you keep on modifying, you keep on changing.
Yeah. Of course. Yeah. I mean, there's no need for us to. I mean, it's not once written and then done.
No. It's
absolutely.
not. Yeah.
Absolutely. So we can keep.
As you go along, you keep on modifying your decisions.
Yeah.
You keep on modifying. Maybe there are many changes.
Correct. Yeah. You can keep updating that. That's great. What do you think are the broader areas that we should consider? So you mentioned, for example, medical. There is a need for obviously planning out the medical part of things, the longer term care. Those are some things from the medical side. From the financial part, how would you look at and ascertain what the objective for a client should be?
First I'll come to the medical part and then the financial part.
Yeah.
Most of us have medical insurance under the group medical policies.
Correct.
And I go to many clients and say, Ashok, I'm insured under the group. The problem that we face is that as long as you are employed, your employer has medical insurance on you. You don't have it.
Sure.
The employer has medical insurance on you, and he has the full right and choice how he wants to modify it.
Correct.
Next year, if the claims ratio is bad, he can downgrade it, upgrade it. That's his choice.
Correct.
Secondly, and this is something which has happened to my clients more than once, they have been diagnosed of serious illness.
Yeah.
Because of the serious illness, they have not been able to continue with their employment.
Sure.
Now, they have lost their employment. Yeah, the employer was very good. They gave the 3 months pay and travel and gratuity. Everything was paid for.
Sure.
But now the client, my friend, does not have any medical insurance. Also, he cannot buy any further medical insurance because of the medical pre-existing condition.
Pre-existing conditions.
So what we have to do is we have to make sure that the medical insurance that I have will continue beyond my employment. It should not be only till employment. It should be beyond your employment. There are a couple of plans which are available, which, if someone goes and looks around, we'll be able to find some plans.
Sure.
Coming to financial planning, we have to start saving money at the top. Maybe you want to save 5%, 10%. And I keep on telling my clients, saving is like exercise. You start with 10 pounds and then you build it up to 12 pounds and 15 pounds. And first you do with 10 repetitions and then you go up to 15 repetitions.
Keep increasing it.
I don't care how much you save, even if it is $500. Start saving $500, increase it to $1,000 and $2,000. And once you have the basic corpus of money in your accumulation, that itself will propel you to save more money.
Yeah, you see
because you see the figure, it propels you to save more money. How much money do you need today if my expenses are, let's say, $10,000 per month?
Yeah.
People say when you retire, you will not need any clothes, and I don't think so. Yeah. I mean, your income, your expenses may go down marginally.
Correct.
But also you'll have more time to spend money. Probably today you go to Dubai Mall on a weekend or twice a month, but then you'll have time to go to Dubai Mall every day. So don't expect that your expenses will reduce. Very difficult. I haven't seen.
Yeah.
Also, make sure that you are passionate about something. People say, "Oh, I'm 65. I can't learn new reading or music, etc." Who says who?
Yeah.
And who stops you from learning to play a new instrument just because you're 65? No.
Absolutely.
70, 75? No. Go ahead.
Yeah. Yeah, I think it's you.
It's your mindset.
Yeah. You limit yourself more than anybody else. If you believe it's possible,
it's all up here.
Absolutely. No, absolutely. I think. I mean, you mentioned something very interesting in terms of the ability to sort of save first. I think that's what you were referring to build a habit of saving. The habit of or being able to save money in time. What are the biggest challenges that you've seen clients face when it comes down to building that habit of saving? Is it more a perspective of saying that I should be able to not see it, goes away, or making that decision later on to save has proven not to be very effective?
Sometimes people say, I can get 7% return or 8% return. Why haven't you've been in Dubai for the last 15 years, why haven't you done it? Why haven't you saved that much money now? What is the guarantee, what is the surety that you will do it in the next 15 years?
Correct.
So irrespective of the interest that you're generating, even if the interest is 2%, doesn't matter, as long as you have a system where you can systematically, methodically save money, which you cannot withdraw very easily. It's very simple. If the money is lying in fixed deposit, you will not withdraw before 1 year.
Yeah.
If you have money in your pocket, it's not going to stay more than 24 hours.
Yeah.
So build a system where the money is locked in for a longer period. Make sure it's secure. Find an institution, find a structure which has assurance, which has surety that it's going to be there. And don't worry about the interest. You will have money once you have accumulated the basic pot, then you can play around with stocks and bonds. Yeah, you have to invest money.
Correct.
Because the fixed deposit itself will not give you enough returns. Yeah. So part of the money has to be invested in stocks, bonds, shares, whatever you want to call it. And when you have enough, then have a small amount, what I call is play money. If you want to buy the oil futures or crypto, that's fine. Just play with that money.
Sure. Yeah, and I think, like you said, keeping it in a fixed deposit account is not going to help the money grow to the level inflation is a factor, and that's one of the reasons why I think the same amount, or considering the same amount of money setting aside for planning for today, probably is not the right idea, because 10 years down the line, that inflation would have also kicked the value of things up.
But as long as you first have the basic wealth, or the basic amount which is there, that has to be secured.
Yeah, and that brings me to, like you mentioned, the medical insurance part. I'm just going to dive into that a little more. You did mention, and I completely agree, that many a time the policies are provided by the companies. Couple of things happen. In case of illnesses, those covers tend to cease after a certain period of time because you lose employment. So what are the things that an individual can actually do to counter that? So, I mean, are there policies that you recommend someone takes while, or when should they take it?
Yeah, these are some of the okay. First of all, you can only take these policies when you do not have a medical condition.
Correct.
If you have a medical condition, none of the insurance companies are willing to take that risk.
Correct.
It's like going to an insurance company. Oh, my car has met with an accident. Can you insure it now? No, I don't want to insure it. Yeah,
of course.
So you have to buy the policy before someone gets sick.
Correct.
Or hypertension, diabetes, etc.
Sure.
Take a policy, most of the international companies will give you, with a high deductible, only hospitalization. You don't need to do a outpatient cover, because we can all afford to pay for the outpatient expenses.
Sure.
The problem is that when we have a major medical expense, cancer, heart or bypass, etc., those are the ones which cost enormous amount of money.
Yes.
And sometimes I ask my client, Mr. Prospect, the money that you've set aside, what percentage of that money are you allocating for your medical expenses? No one does that.
No one. Yeah.
But one day, the money that I've saved, I will give it to a hospital or a doctor. So ring fence your savings. One is medical insurance and the other one is critical illness.
Right.
Absolute must.
Yeah. So medical insurance, I think we've dived into. Yes, top-up policy, a policy that will help you cover the gap. That is portable. That can take you across for the later years of life is and take care of you during that point of time is important. Talk to us a little bit more about critical illness and how that plays out into the financial planning of individuals and families.
I think critical illness is the most important part in your financial planning, because before the age of 65, the probability of someone meeting with heart attack, cancer, stroke is so high. And, the families have been devastated. Yeah. Suddenly, recently, one of my clients in his early 40s, stroke, massive stroke, no medical insurance, no critical illness. The family doesn't know how to cope up. Yeah. And when you have critical illness, the company will pay you maybe $200,000, $300,000, $400,000 lump sum upfront. You can focus on recovery instead of worrying about the finances. My finances, my bills still have to be paid, my house rent has to be paid, my mortgage has to be paid.
The school fees,
everything has to be paid. Yeah. And this is the time when I can focus on recovery. Probably sometimes the family can take a holiday.
Yeah.
Because this is required. We know the life expectancy. We know what is the final outcome.
Yeah.
Let's spend some quality time and not worry about. I remember one lady had to come back to work again and again every day because she could not afford to take time off. So critical illness is a must in your financial planning. Please talk to your advisors and make sure that you are adequately insured with critical illness.
Yeah.
Absolutely. Yeah.
I agree with you. And I think, like you mentioned, there are some basic core concepts when it comes down to financial planning. And the three that I would talk to clients about were life insurance, critical illness, and medical insurance. And one more, disability income, being a part of that sort of the foundation of any financial plan.
Absolutely, yeah.
And I will touch upon the other two now. So life insurance, when we're looking at it from a perspective of there are two ways we can look at life insurance. One is what do we want to leave behind to the next generation or to the spouse, and the other being how do we cover our debt or cover the liabilities that we have. I mean, so there are both those uses that we can put it to. Do you see that? Are there any other ways that life insurance has been used, either to sort of unlock wealth or to be able to help during the retirement years?
Yeah, if you have in the learning and the earning phase, you need more insurance because we're still spending time, and maybe when I reach the older age, maybe the need for insurance is reduced.
Sure.
Because my children have grown up and my mortgage has been paid off, so
Correct.
maybe the requirement is less. So at that time, probably I could take part of the money from my insurance policy to fund my older years. I'm not going to use the word retirement, to fund my older years. That is one. Secondly, sometimes people have the life insurance is good because most of my assets are tied up in brick and mortar. They're tied up in business. It's not liquid.
Correct.
In case of death, at least the family gets liquid cash. To do whatever. It's very simple. If you die, your family gets the money. They're happy. If you want to encash the policy at the age of 70, 75, you get the money, you're happy. So where's the problem?
No? No problem at all. And the second part is the protection of income, for which we've got two solutions necessarily that, in a sense, that meet those requirements. One is critical illness, which we spoke about, and the other being disability income. Would you be able to give us a little overview of what that entails?
Disability could be due to sickness or accident. And when a person is disabled, our income goes down and our expenses increase. Because I may not be able to go back to work regularly and my expenses will increase. Maybe I need extra help in the house, or maybe the doctor's expenses and the medical expenses. So a disability income where it pays an income every month, guaranteed income every month for a certain number of years. We can have from 10 years to lifetime depending on the plan. These are some of the aspects a person should look at before it is too late. No one wants to die. No one is thinking of, but it happens to people like you and me.
Absolutely.
We have to plan. I cannot make my family suffer. The money that I'm earning today, I have to make sure that my family is well provided. They can sustain the standard of living. They can live life with dignity.
That's definitely, I think, high on the list of most of our advisors when they meet with clients. How do we let our clients and their families live and lead a life of dignity? What are the mistakes you've seen clients make when they're planning or not planning for the later years in their life?
When they think it's too far away. They think, retirement is 15 years away. Okay, I'll take it. It's not far. You have to plan now. People keep on postponing. People keep on delaying the decision. They don't want to commit.
Okay.
Commitment is like pregnancy. You cannot be half pregnant. Either you're committed or you're not committed.
So committing to a plan is one of the things that you've seen them not do well. And what are the things that are examples of people who've done something really well that you could share with us?
The best, what I get from my clients when I see that they have saved because of my discussion with these clients, they have implemented some of the plans. The happiness is when the client says, Ashok, thank you for being there. Thank you for helping me to put my house in order. It's great to see when the kids are going to college and they can use the money from the insurance policy that they have saved, and that pays for their education. It may not be 100% of what we had planned. Maybe the cost of education has gone up, but at least it pays some. When the client comes, one of my clients, he bought a medical insurance. And it took me, true story, and
Yeah.
it took me about 6 months to close that policy. The client is a billionaire, so money was not the problem.
Sure.
But probably it was not on the top of his agenda.
Correct.
We had to get his medical information, blood pressure, etc. And less than a year into the policy, he's diagnosed of cancer, throat cancer.
Oh.
And he goes to, this was many years ago, and he goes to UK for treatment. And he says, Ashok, when you came to me, I thought you were a pain. But today I remember you almost every day. I mean, that's the biggest compliment I can get.
No, absolutely. And that's a sign of a job well done.
I think, absolutely.
I think many of the advisors I've spoken to, the biggest regret that they tend to have is not insisting or talking to a particular client, or either because of embarrassment or not feeling.
Yeah, sometimes we start sympathizing with the client when, I don't have any money. Look, I have to pay for this thing. When you're alive and you have a job, and you can't set aside $1,000 a month, how will your family set aside? How will your family get $10,000 of monthly income when you're not there? If your income is 50,000 dirhams, you can live in 45. If your income is 15,000 dirhams, you can live in 12 and a half. If your income is 5,000 dirhams, you can live in 4,500 dirhams. And if your income is 1,000 dirhams, you can live in 950 dirhams. We have to learn to save at the top.
That is brilliant.
Absolutely, yeah.
Absolutely. I couldn't agree more. The message save first and then spend is something that I think we all learn fairly early into the financial planning and profession. And on that note, I think we will look at calling the conversation to an end. Any words that you'd like to leave our audience with?
They say life is a stage. I want to be in the center of the stage, giving my best performance when I leave. We have to make your life worthwhile. It's fun.
Thank you. And with those words, we will.
Thank you, Anselm.
We will end the episode. I'm sure we're going to have Ashok return to the episode, to the show many times, and we will keep getting more inspiration and knowledge from him. Thank you.
Thank you.